Hello everyone! Today we'll be looking at one of the leading companies on the US stock market in terms of capitalization, and a company you all know well, Jeff Bezos' Amazon. Let's see what the prospects are for this company's stock price. And don't be misled by my orange t-shirt with a bear on the chest. That's left over from my previous review on Bitcoin, which I did earlier today. There I have a bearish outlook, meaning I expect the decline to continue. Here, I don't expect anything. The chart is absolutely unprepared in the sense that we'll be analyzing it together and figuring out whether it's a long, a short, or maybe an unclear situation. That also happens in the market. Let's switch to the chart. I want to emphasize that I haven't prepared anything in advance and I don't have any preliminary conclusions. So, the company Amazon, monthly candles. What do we have here? We have 4 moving averages. The 50 period in green, the 100 period in red, the 200 period in orange, and the 300 period, 300 months in this case, in blue. Not every chart has them, only those with a long enough history. Oh, and we have the RSI indicator. That's basically all we have. We can also draw trend lines and support resistance levels. Well, let's start somewhere. First of all, with the simplest thing. Look, we had a pretty serious and significant drop, a substantial decline for 3 consecutive months in a row, and then following that, an engulfing pattern of 2 distinct bearish candles appeared, and the crucial target level, where exactly was it located, you might ask? At the start of the decline. Let's mark it as a key level. Let's just set the magnet tool. So the growth target was right here, the starting point of the decline. It hasn't been covered, but by formal criteria, there's no short here either. So yes, we've hit this level, 234.06, but we don't see any bearish engulfing patterns here, which means by formal criteria, this is a long position that threatens to set a new all-time high. We don't have a divergence, meaning that by formal criteria on the monthly time frame, there is no divergence. Because if you consider that the RSI peak here was higher than over here, yes, with a higher price per share, then notice that we had a very deep correction, so it's incorrect to treat these highs both in price and RSI as a divergence. So there is no divergence here. This is a long position. On the monthly candles, it's a long until stated otherwise. That's it. Now, yes, but I would also like to point out one more thing on the monthly candles. Look, the price has already touched the 100-month moving average, which means the next touch of the 100-month moving average risks taking us toward the 200-month moving average. Just something to keep in mind, just in case. But here the long continues. Let's move to the weekly candles. We remove our levels. Here we'll look at the chart from scratch in our own way. What do we have here? Here we had a large bearish candle that engulfed several weeks of growth, specifically 3 weeks. And we haven't covered that candle yet. Let's mark it as a key technical level, 233.45. Take note, there was an attempt to break above this level, yes, meaning we opened higher with a gap but then dropped back below. For now, there's a short structure here. On the weekly candles, we have a short structure. Why? Because this red candle hasn't been absorbed despite all the attempts to move upward. If this is a short, then what is the target? Well, the technical targets look as follows. Here is the base of the green candle, which we haven't reached yet. That's 209,080. Oh, sorry, I was talking about Bitcoin there. $209.89. And probably closing this gap, at least visually, right? That's why I'm taking not the body of the candle, but its wick, and it roughly coincides with the 100-week moving average. This is around $194.70. That's how it looks here and now. Yes, the current wick is green. Yes, the monthly candles suggest growth, but structurally this is a short that isn't finished yet. So, it could be a short, it could not be, but let's put it this way. I wouldn't go long on the current state of the weekly candles. You can say you should go short here, but I wouldn't go long. Let's move on. Yes, and there's probably one more very important level that needs to be noted. This one here, it also serves as a very significant and important support level. This is, pay attention, 190, let me just make it yellow so it stands out, $199.99. This is the highest close from July of last year on the 24th. Accordingly, we can also test this level, and it acts as a kind of magnet. So the downside targets on the weekly time frame are the area around $210 and the area around $200, with a potential drop to around $195. And these are the points where, based on the monthly candle data, you can try to look for a long entry, but not right now. Let's move to the daily candles, first removing all the markings. What do we see on the daily candles? For me, believe me, this is just as much a discovery as it is for you. That is, I don't know what we're going to see right now. There's something on the chart, so let's analyze it. Look, the first thing that catches my eye is the huge gap in this area, right? And this gap was closed by the price rising. The second thing that stands out to me is the new all-time high. Let's make the line thicker and more yellow. There we go. Now, in relation to this, magnet is actually getting in the way. And notice here the RSI was at this level, and here the RSI was much lower. Yes, we had a dip and then we had a recovery. And as I already mentioned, it's not correct to consider this a divergence on monthly candles. But nevertheless, such a rise with a new high is quite strong. Look at how long we were growing, and the fact that the RSI didn't reach new higher values indicates market weakness. It shows that the fuel is running out. There's no more energy left for such dynamic growth. And this points to the risk of a decline. Now, moving on. We broke through the 50-day moving average, hit the 100-day, and are now in the range between the averages. This means that we are in a place of uncertainty. A close above the 50-day is a formal long signal. A close below the 100-day is a formal short signal. Let's define the target for the long position. This is a potential level of $234,000. Oh, again from Bitcoin, $234.02, right? Because here we had some kind of reversal and bounce. The target for the short is the lowest close, but I wouldn't take the gap one. This one, that was the opening and the close. Right here. That's $218. But strictly speaking, this can't be the target. Why? Because if we break back through the 100 since the 200-day is already nearby, we've approached this level many times. And there was even a false breakout here, so the next level becomes the technical target, right? We could mark it as the 200-day moving average, but we'll mark it as the lowest candle close. That's $211.72. The situation on the daily time frame is uncertain, but still with a downward bias, with a downward priority towards, let's say, $214.50 or $211.72. That's the current situation. Well, let's also take a look at the 4-hour candles. What will they tell us? But that's too small of a time frame. Well, the situation is very similar too, right? Very similar to the daily candles squeezed between the moving averages. There you go. They've bounced off them many times already, and accordingly, the next technical target below is somewhere around $210 to $211. That's the story. So globally, from the perspective of monthly candles, it's a long, but the daily candles and especially the weekly candles indicate that this is a decline that hasn't ended yet and could continue lower. Subscribe to the channel, leave your comments, likes and dislikes. See you next time.